Good morning, everybody. Welcome to the Options Trading for Income Weekly Update with Locke in Your Success. Before we get going, we would like to quickly remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that we do use hypothetical computer-simulated trades in the presentation, and that live results may vary. Also, please be aware that risk of trading options can be substantial, and please be aware of all your risks prior to placing any trades. Coming over to our website and check out our programs. The Super Simple Spreads Trades is out. It was out as of, I think, last Friday, and SMB is currently offering a special. It's for $6.95 until the 1st of May. So anybody is interested in that, be sure to get that before the price increase. So I'd like to thank everybody for all their support and the people who have already purchased and the great comments that I've already gotten. Everything's great, so I appreciate that. This, by the way, is only available through SMB right now. I don't have a direct link from my site. They haven't given me the final links for that yet. So let's see, I have a quick question. Okay, somebody got it and have not received the login details. If you're having any problems, you should get your login details immediately. You need to contact Seth at SMB or SMB directly on that. That's something that isn't handled on my side. Can you email me directly at john@lockeandyoursuccess.com if you can't get a hold of Seth or if you don't know his details? And I'll forward that out to you and we'll get that straightened out. Okay, so moving on. We also have the M3, the Bearish Butterfly, the Rock, the M21, and of course all our one-on-one coaching programs. So come on over to our website and check that out. Also join our mailing list and get your free report, 7 Secrets to Become a Successful Trader, and sign up for this free weekly webinar. So stay tuned for our programs currently under development. We're currently doing Advanced Position Management Squared live in May, which is currently sold out. I might have one seat opening up for this. I have somebody who may need to back out because of a personal issue. So if anybody's interested in that seat, please email me and let me know. And I'll probably know this week whether he's coming or not. If not, then I do have one open seat. So just keep that in mind. As far as estimated availability on an online course, we're looking at June, sometime in probably mid-June. We also have the Trading Triangle book coming out. We're pushing that into the fall, and I'm thinking the online trading course for Trading Triangle is probably going to be spring of next year. It was a little too aggressive having it done in the winter, so probably push back to spring, and then we'll be going from there. So if there's anything you would like to see as far as programs too, please let me know. What do you need for support on current programs? What can we do to help you out and come out with? So anything like that, let us know. Just email me, and I'll see what I can do to get that together. And of course, here's my contact details if you need to contact me. So let's just kind of move on. Why is Casey Brewers, why is APM squared? APM squared is because we were looking at doing advanced position management, which is the primary title of the course, but we're also spending a good 4 hours on what we call advanced personal management, and it's also going to be filtered in through the course where we're talking how to deal with stress and fear, how to change the way you feel and the way that people work in general so that you can go out and you can actually be a better trader from a psychological standpoint. So that is where that is. You cannot find the link here. Alexis, if you cannot find the SSS link, just please, again, email me, and I'll get that information out to you. I know it's on SMB's site, and even I don't know exactly where it is, but just do that, and we'll get that out to you. All right, so what I'd like to do is just kind of quickly review what's going on in the market here. So last week we were at some diagonal support levels. Kind of expecting the market to bounce. I wasn't confident though because I'm thinking, well, the market's pretty topped out and diagonal support levels aren't all that strong in general, so it could go either way, but we're likely to go up. And we did. We bounced, and the S&P went pretty much right where you would expect. It came right up to our resistance levels. The Russell and the Dow kind of lagged behind that, and of course we had a strong breakout on Friday on the NDX. And this is in general, considered a pretty valid breakout. We have a nice sideways base for a period of a couple of months here, and a nice strong breakout of that range, clearly defining that. So that is going to be bullish for pretty much everything if it holds. So what I'd expect from here is I'm going to watch this leader, the NASDAQ. If we get any sort of retracement, I'm going to be expecting this support area to hold. If this support area fails, it's likely going to be a fairly aggressive down move for the markets in general. However, it's more likely that it's going to hold. It's more likely that the SPX will break out, right, because we're right at the top here. So on the likelihood the SPX breaks out, and which it's going to do this morning, according to the futures anyway, if the market opens there, that's going to be an indication. We have 2 out of 3 indices breaking out now. That's probably going to drag everything higher, and we'll probably see the Russell follow that, then followed last by the Dow. So most likely that's what's going to happen. If it does happen, we're going to be looking at a move on the Russell to approximately 1310, 1312 on the Russell is what that would equate to if we were to get a breakout in the SPX and it were to hold for the day. I mean, you have to remember, we may get a breakout in the morning. A breakout in the morning with a breakout failure is actually bearish. A breakout for the day with it holding is going to tend to be bullish, and it's very, very likely at that point we're going to start to run higher. So that's what I'm thinking for the markets, and I'm watching the NDX for a failure. Of course, if the SPX fails and that pulls the NDX down under support, we're probably coming down more to the 1230 area fairly quickly. But that's what we're looking at. So that being the case, let's move on to how we're doing with our trades. So if you remember, we'll start with the Bearish Butterfly. This is what this particular position looked like last week as of Monday. We did have a bounce, but the retracement on Monday actually put us back into profit range over our, remember that was 21 days to expiration. We have a 21-day to expiration exit on this. So if we take a look at Friday, we're looking at over our 10% reduced profit target. The reality is by the end, a little bit later in the end of the day, the market actually pulled back a little bit more. Pricing got a little bit better. We ended up at about $5,900 on the exit on this. So really a nice simple trade. We had, if we take a look at our T-log here, we had an entry, sat in the position for a long time, ended up having to do a delta theta roll, and we're able to pull out of the position today at our reduced profit target. So really simple, easy positioning there. Let's see, the May M3 trade. We'll come back to Monday. Again, without a whole lot of market movement, there wasn't a whole lot of excitement here. This is the position we were in as of Monday, and we're looking like this here. Not really a problem on Monday. We have our deltas kind of within range. We were at the edge of the tent. We allow minus 75 there. Theta is positive, Vega is negative, so everything's looking good. If we move ahead till Wednesday, with the up move, we're clearly up outside the tent at that point. Also experiencing a issue with negative delta. Again, outside the tent, we're only allowing about minus 50. So coming into this, all we did is we did 5 of these 1230, 1240 verticals to flatten that out just a bit. Brought us back into range under minus 50. I could have been more aggressive with this, but minus 43 was fine at the time. I was happy with that. We're outside the tent, but we're not way outside the tent. So, perfectly happy with that that type of a delta range. And if we pop forward to Thursday, we had a continued up move, and what we ended up doing with that is, when this shows up, we ended up doing 5 1240, 5 1250 verticals. Put this into a position that looks like this on our analyzed graph. Greeks are looking nice. No no real problems there. And then as of Friday, there were no adjustments on Friday because the market pulled back and we were still within delta range. This is what we looked like the end of day on Friday. So position is looking perfectly fine. Would certainly rather have the market come back down into the 10th than take off to the upside, but you know, we're just going to follow the guidelines. We'll see what happens. I actually like being positioned this way at a decision point in the market, because if the market decides it wants to come down significantly, like 20 or 30 points in a day, I'm pretty well covered to the downside. And if it decides it wants to break out and shoot up to, who knows, 1280, 1300, or take one of those 30 or 40 point up moves, I'm still fairly well positioned for that as well. And then we can let it move in and then just reposition here. What we don't like is for the market to go up 5 points a day, 5 points, 5 points, 5 points. That's what's under those conditions, we're just going to kind of get ground out and take a break even. But any of the other scenarios are good for us. So that is what we're saying here. So I have a question. Does a T+0 line above the dot mean the profit should be higher than what the position prices indicate? The option view settings that I use are set for theoretical pricing based on a certain model and combining put and call skews. So that being the case, sometimes the theoretical price is significantly different than the actual pricing of the options. I want to know, I'm using the theoretical pricing and the theoretical Greeks for the purpose of determining what my real delta is from a theoretical standpoint, because when price moves up and down off my theoretical line, if I try to attach my line to my price, it's going to change my Greek numbers. And I don't want to know what they're posting as actual Greek numbers based off of false pricing. I want to know what theoretical Greek numbers are off of theoretical pricing. Therefore, we use these settings, and sometimes the line's going to be above, sometimes the line's going to be below. It does not necessarily mean that the dot's going to match up with this line. The only true positive thing we have going on is that this solid red line at expiration, that's what it's going to be worth, right, at settlement value. Other than that, you may be over, you may be under. And I just assume that this dot's going to remain under this line for the duration of the trade. That doesn't always happen. Sometimes it matches up with the line, sometimes it goes over it, but I just make that assumption for the purposes of deciding, making decisions on how to manage the trade, and it works very well. So that's what we do there. Okay, so that is the M3 position as of Friday. So we're basically at break even, and it was looking fine. It's certainly not in any trouble here. So let's move out to, let's see what else we got. We have the May rock trade, which also had a few adjustments this week. So one of the things with the rock trade, oops, let me go back and go into the right account, is that the market came down, we got kicked back into what we call rock with one rollback, which is a position that looks like this. And the guidelines way to handle this is we're just going to have a different delta range if we get 30 points over this short strike. So in this case, I'm looking at a minus 150 delta to do something here. And I hit that on, let's see, Thursday. So this trade was really had no moves till Thursday. I'll show you Wednesday. This is what we look like on Wednesday. And then on Thursday, our delta number started to increase, and we were also over 1270. So that put us in a situation where we start scaling back into the trade. And in this particular position with the rock trade, our move is actually to scale into these. Let's see, we're in 1240 here. It's actually to scale into 1280s, and then drop out of my 1300s if I need to, and bring us more back into a regular aggressive positioning. So that's what we did here. We came in, we bought 10 of these 1280s. We had 5 1300s. We dropped that down to 3 1300s. Brought our delta at exactly minus 197. We're at minus 197 here. Realistically, you want it to be around minus 180, minus 197 is fine. Here is the position as of Thursday afternoon. And then on Friday, we came in, and of course the market came down a little bit. No adjustments needed here. The delta's within limits. And it's up about 2,700. So this trade, if we get a down move again, that should generally be fine. If we get a grinding up move, that'll actually be very good for this. If we get an explosive up move, it's going to be problematic. So we'll see how it makes out. But that's our positioning as per the guidelines. And okay, so that's the rock trade. That's where we're sitting as of Friday. So I was just looking at a question. Can I please reiterate what you are looking at on the T+0 line for 30 and 50 point moves? I'm not exactly sure exactly the context of the question, but I will take a shot at it. Here, okay. Basically, I was just saying. I think I know what you're talking about. Basically, I'm just saying if the market decides to run the 1280 and back off 30 points, then we're looking pretty nice here for the trade. Or even if it backs off 30 points from here, we're still looking fairly nice in the trade here. So I have plenty of room to the downside. So if I'm coming into the way we use technical analysis differently, or at least you should use it differently as an income trader than you do as a directional trader. As a directional trader, you're using it as a control point to make long and short decisions. As an income trader, we're using it as an area where we know the market's likely to be very volatile and have very fast and hard moves. So that being the case, coming into a resistance area like this, where I think I might have a very fast move or hard move, I like to be positioned something like this, because a fast move in either direction, whether it be 30 points down or so, or 50 points up, which is going to be way up in here somewhere, either way, it doesn't hurt me. It's not a big deal. So I like to be positioned in that manner coming into a resistance point or bouncing a support point, because I'm not guessing direction. I'm just allowing the trade to be able to take the likely volatility that's probably going to happen at that level. So that's what I'm thinking. That's why I like to be positioned this way at a resistance or a support level. Hopefully that helps you. And how do I make this decision to adjust in advance? Well, on these trades, I am not making any decision that's outside the trade guidelines. This happens to be where the trade ended up. It happened to be positioned okay at a resistance level. And if it was at an adjustment point, I would adjust it, because on the sample trades here, we are simply going by the guidelines within the program. We're not taking any guess on where the market's going. So I'm not taking it here. I mean, from a standpoint, if I want to incorporate that, then yeah, I might adjust ahead of time to accommodate for increased volatility at a support or resistance level. But as far as what we're doing with these trades, we're not taking that into account at all here. So, and you'll find it works out just fine either way. All right, so moving forward, we have a V condor for May, which I don't believe had any adjustments. Let me just look here. Nope, nothing. So let's come into May, V condor. And this is one of the trades in the super simple spread system here. It's currently up about $2,800. We're positive 33 delta, which is within limits. We're positive theta. And we're sitting in a position that looks like this. Obviously, a fairly fast up move or a grinding up move is going to be very, very good for us here. The market sitting is probably, it's not going to be problematic. We'll still make money. We're just not going to make as much money. And of course, if we get a really, really hard down move, then that's always problematic for a condors type of position. But this is where we're at now. We had no adjustments, and if you want to look at the T-log, all we had is the entry, which is not that uncommon for this type of trade. All right, let's go to two trades that were entered. I entered on Friday, and we entered a M3 trade, so we'll just take a look at the entry for that, because we were 56 days to expiration. So our June M3 was simply entered with 1240 butterflies. 10 of those and one 1120 call. Put us at about -5 delta, which is within limits. We have obviously the loss from the execution going in, and this is what we have, a very, very nice looking position for June. So really liking that there. It's a nice flat T+0 line. And as far as the bearish butterfly here, we have our June bearish butterfly entry, which was essentially the same position. We're buying the 1240 put butterflies here, 50-point wings. We are not adding the call. So this is what our bearish butterfly position looks like here. As far as that, the cost is a little higher than I'd like, but it's certainly very reasonable. It's around $10.60 or so. I mean, it's $10, 10 to 10, a little over $10 here. So reasonable pricing. Our delta is a little higher than I like, but there's a position there. All right, so how lock the bull and bear trades? Thanks. I don't understand that question. Are you referring to? Did I goof up the bearish butterfly and the strikes 1, 2, 3, 4, 5? Nope. 1, 2, 4, 5. Okay. So I have a bunch of questions coming in. Can I show the T-log for the Rock trade? Yes, I can do that. Let me just go back to the Rock trade and we do a T-log. That's what we have for the T-log for the Rock trade. I'm sorry, I'm just looking at the questions here. How looks the bull? You're referring to the super simple spread trades, how they look for this month. Obviously, we passed the entry date for them, so we're going to be looking at the June entry when that comes around. I'm sorry, the July entry when that comes around. So for a bull trade, as far as the bull trade for June, that was actually put on the very day that the very day of the high. So that is slightly down. And again, that's one of those times that sometimes you cringe to put them on, but usually they work out fine. I don't know if I have a. Yeah, I don't have one in here, but it's doing fine. It's not a problem. It's at about break even there. Bull trade's about at break even. The bear trade would not have been entered because the market's not high enough. So so that would not be entered this month. All right, so let's see here. Why 40 strikes versus the 5 short in the bearish butterfly? Why the 40 strike versus the 5 short in the bearish butterfly? I don't understand what that means, Mike. All right, so why did I use 1240s and not 1250s on the bearish butterfly? That would be closer to 30 points below the market. Yeah, so bearish butterfly, I go 30 to 40 points below the market. I could have done either, so either entry is within, actually I go 20 to 40 points below the market. Either entry is within guidelines. So unless of course I have, if I go back to the June bearish butterfly, I can be anywhere 20 to 40 points behind. Generally, I look, if I think the market's going to grind on me, sometimes I like to be a little bit closer. If I think the market's going to have a large move, then I might go a little bit further behind. And that's whether the large move is up or the large move is down, because if I go further behind, I lose less money if the market goes up. If I go further behind, I make more money if the market comes down a lot. So, either case, to me, that's a win-win if the market's going to move a lot. If I have a delta theta problem, I'm going to go closer to the money. If I think the market's really just kind of dead and completely going to be grinding, then going at the money is a little more advantageous, or closer to the money is a little more advantageous. But realistically, either entry is within the guidelines, within the trade. If you want to bias it one way or the other, you can. You never know whether you're right or not, or whether it's going to work out. But this is how I happen to enter it. So let's see here. Monday mornings, Yeah, I'm probably not going to include the bull and bear trades in the Monday morning updates, and the main reason is that is just because I have so much to go over now. You know, this week happens to be a slow week, so we have plenty of time to do stuff like that. A lot of weeks when we have a lot of movements and we have a lot of trades on, we're just not going to have time to go over that many trades. So I have to decide when to deal with that. Realistically, the bull and the bear are so simple that you should be okay just following the guidelines and working with them. The M3 and the rock trade, for example, and some of these other ones are a little bit more complicated. So at this point, this is all we're planning on doing. Let's see, just to see how it looks, how the trade looks. Oh, when will I put on a June V Condor? The June V Condor is already on. And I forgot about that. So the June V Condor went on the 17th. So those are always 65 days. Those are when the previous month expires. So when May expires, we'll be looking at July V Condor. So that's when that went on. And all right, so do I always do a normal rock with a minimum of 5 call butterflies? You know, I like to do a normal rock with a minimum of 5 call butterflies. Sometimes I'll use fewer to get the delta to minus 180. I don't usually like to do that. Usually if I can't get 5 in, the delta guidelines in the program should put me into an M3 trade. They don't always put me into an M3 trade. So so occasionally, yeah, I'll start with 10 lower butterflies and 3 upper butterflies. If I have to go less than 3, I won't. I'll just do an M3 trade. Realistically, if I have to do less than 5, I don't even like to go into a rock trade. I like to go into an M3 trade. But those are the guidelines for that. And please comment on an expected effect of Apple's earnings on NDX and SPX breakout. Well, if the SPX breaks out, the whole marketplace takes that as a breakout. It doesn't really matter if it was caused by Apple's earnings or not. If we get a breakout failure, then we have a reversal on that. So yeah, so that's usually what causes a breakout. A breakout's usually caused by some sort of a news event, and once that news event happens, the breakout usually is supposed to hold, at least it's supposed to from a technical analysis standpoint, and continue higher. So, you know, just as if you had a Fed announcement that caused a breakout, it's the same thing. We had an Apple announcement that caused a breakout. And if that's the case, as long as it holds the day, we're going to just assume that that's going to move forward. I didn't put the June M3 on Friday. Would I typically wait until after the move to put one on at this point? No, I'd put it, actually, usually you're better off to put it on when the market's moving a little bit if you can. But of course you could wait your whole life and or wait too long and not be able to ever get the trade on. So you kind of have to have a balance of that. I think putting on a June M3 today is probably fine. Could you show the T-log for the June V Condor again? Yes, I certainly can do that. So this was just an entry on the 17th. We were short the 1350 calls and the 1140 puts. So that was a nice looking trade also. Yeah, I wouldn't do it. I wouldn't do a late V Condor. I would just I just go ahead. I would just wait off until the next month. I don't like to do that per se. Okay, so and again, I would just follow the guidelines with those systems. You start breaking guidelines, you don't get the results that, or breaking rules, you don't get the results that you want necessarily. So, plus the V Condor for June's already up a significant amount. I only expect about 3,000 out of this trade, so you know, on average. So, so that being the case, if I'm already up 1,500, then you know, certainly if I went back in time and I put on a June V Condor and I was down $2,000, for example, for whatever reason, then I might be interested in starting a new one a little bit late. But usually if the market's up significantly from, or the trade's up significantly from when the normal entry date was, then I won't even consider that. Okay, so that's everything we have. I'd like to thank everybody for joining me today, and we'll see you next week.